To Next Gen Investing, I'm Alex Coffey alongside Jenny Horne. Jenny, it's time for the FOMO segment. And today, this is the one that's stealing the show today, I think. This is the stock that's in the spotlight. Of course, the overall market is doing its best to try to dominate headlines. But when you see a stock that has moved as much as DocuSign is, it's hard to ignore.
And it's hard to even say the markets are selling off when you see a name like DocuSign with a move down over 40% on the day. And we were joking that this is the most stuff we really have on most of our stocks today because there is so much.
Replicate kind of the cash secured puts risk profile, but buying that to define the risk, but also add a little bit of efficiency to our capital use.
And I just wanted to reiterate sort of the capital that you mentioned, because not only is it, say, someone like me doesn't have just $10,000 lying around and analysts, the stock is trading as low as June 5th of 2020. So really, when you consider this, they're not on pace for their all-time low close. They're just seeing their all-time largest percentage drop. Another thing is this company operates in this electronic signature space. I've actually used them prior to the pandemic. It's a very easy, very seamless experience, sort of reacting as such today, Alex.
Yeah, it's hard to disagree with that, and especially when you see a stock down 40%, there's usually a reason tied to that. So we don't want to discount that there was disappointment, and the analyst reactions, of course, were mostly negative as well. But this potential unique opportunity that only arises when volatility is very high and a stock price is under tremendous pressure.
So just another way you can really take advantage of the market conditions. And I do think that you mentioned it's a very good point. You don't usually see a stock of this magnitude down this large. But one of those things I always say, look at a longer term chart, because sometimes it makes, I think, the move to the downside or upside seem a little bit less daunting. But that does it for this FOMO segment today. DocuSign, just a great name for this segment. But come
Gen Investing, I'm Alex Coffey alongside Jenny Horne. Jenny, we're going to spend the next few minutes talking about the Chinese marketplace, which has been a blemish on portfolios over the last years, to say the least. A lot of these names have been under pressure for quite some time. Adding to what's already been kind of a disappointing year is some news coming out regarding kind of the listing environment.
Yes, so DiDi announced plans they will be delisting from the New York Stock Exchange when they will be pursuing a listing in Hong Kong, which many say marks a new stage of decoupling with some of these Chinese companies from U.S. markets. So I think that's regulatory headwinds or increasing competition or just, the broader market that we're seeing today.
So I recently heard a new term. I think it's primarily used in kind of the internet forum world and the crypto space, but it's called FUD. And apparently it means fear, uncertainty, and doubt. And I think it's typically used to kind of discount move in Alphabet. It's down 37% year to date. JDcom, another kind of e-commerce player, down almost 10% today, 11% on the year. So it's given back the entire year, basically just today. These are big moves. But I think this highlights why, even when we've talked about these in the past, that we've always talked about risk definition, because this risk is now more real than it's ever been, and I don't know what it means. I don't know if anybody really knows exactly what this will mean for these stocks and the prices, but clearly today it's perceived as a negative.
And it really makes no sense to me, honestly, when you consider this is the Chinese version of Upside. Finally, that is Marvell Tech.
Coffee alongside Jenny Horne. You're watching Next Gen Investing here on the TD Ameritrade Network. Jenny, it's time for Under 30. We're talking some Marvell here today, and so maybe a little bit more of a bright spot on the board, as this is actually a stock that's not only up, but it's up a lot.
It is up a lot, and I'm so glad we're ending the show on a Friday on a positive note, because we've talked a lot about selling off, and I just need some positivity for this Friday. So Marvell, their earnings are doing just that. This name is on pace for actually a record close. They're up over 75% this year, but even more significant than that.
On Next Gen Investing for our Under 30 segment. And just to kind of put some last kind of numbers here, Jenny, to what George is talking about, because he talks about more efficient companies, so making more on the revenue that they're already making, and of course the growth drivers that both you and George highlighted. It does currently trade at a little bit of a swollen price to earnings ratio, even on a forward-looking front versus kind of the sector median. But if there's this perception that down the road they're going to be more efficient, they're going to continue to grow, you could maybe justify that a little bit more so. And the market appears to be doing just that with the stock. Take a quick look.
Yeah, you know, I would like to end things on a positive note, but it's not really looking that way. The only thing that's up right now is really
Tesla, Nvidia, as you can see there on the board. So a lot to monitor here going into the close the next 2 hours. I think are going to be very interesting, Jenny.
Yes, and you mentioned watching really all of your positions and just watching the market is very important when things are so much on the move, it seems.
They are, and so we'll keep our eyes on that. But that does it for us here on Next Gen Investing. Thanks as always for tuning in and joining us